Good afternoon, everybody. This is Dan Hussey with ElliottWaveForecast.com, bringing you our London session scalping room recap. We're going to take a look at some of our trades from this week, what worked, what didn't. Take a look at some of the markets we've been following and what we're seeing going forward into the future here. I want to begin with the S&P 500. We're kind of hit and miss on gap fills today. We had, two successful gap fills, two not, so kind of scratched out on the S&P this week. But ultimately, what we're seeing, and probably best to step out to about a 4-hour time frame, we're seeing our prior highs to highs extension holding now from this is basically the full halfway back from this summer that has broken out of its target. We're holding a support level drawn from the 1705 highs to highs here on the S&P. It's actually 1706 high, I believe. Nevertheless, support has traded at the 1740s. Below 1730, we see a 1707 to 1700 support area potential for the S&P, and we've gotten a very sharp snapback reaction. We have traded into the 61.8 line and broken the full short, which means the full ambush long is actually valid now off of these lows, and this would be a pullback to the 1748s that can be bought in the direction of the larger swing towards 1790 half is now the upside target for the S&P, and ultimately we'll be looking for 1748 half bid for the 1765 or 1766 target. From 15-minute time frame, we filled our gap this morning shortly after the open, and we talked about this morning a nice little trade opportunity that occurred. It was a 1736 low to the highs of this morning at about 15 minutes after the open. We put in a high. We pulled back into the 1744s, right into the gap fill that aligned with the 1743 quarter long. That trade went to and has now gone through targets. Market began extensions. Extensions have now traded once to target. Same anchor new high. Whoa. There we go. Same anchor new high. Just traded to target again. So for a third time, we're drawing from a 1750 quarter to highs with a pullback into the 1755 halves would take us and continue in our trend upwards. Below 1754 even, we'll look for the 1748 support here in the near term. Definitely a technical market, and potentially some downside or pullback into the afternoon. But keep in mind, both Ben Bernanke and President Obama are speaking this afternoon, and actually I believe Obama is speaking in a half an hour, Bernanke in 2.5 hours. So definitely the potential for volatility this afternoon. I wouldn't the news is done, it's over with from this morning, but whenever those two open their mouths, there seems to be some kind of reaction, and certainly the markets tend to move. So we'll see what happens this afternoon, but definitely a bullish day. Bank has been just straight up all day. We have bullish divergence from our tick. In other words, the high in the tick is not the high in price for the S&P, and there's no reason to think the S&P won't continue higher into this afternoon and into the close. Next, let's take a look at the dollar yen. This is one of the tougher trades this week. It's been very quick. You kind of had to strap yourself in and get ready for the ride. But yesterday we were talking about how above 97.60s, it was kind of our line in the sand for the dollar yen, and it continues to be our line in the sand. So if you are currently long the dollar yen, I would not have a stop below the 97.60, and actually I am considering a stop reversal below 97.60. And you could try to buy the breakout above 99.40s, but honestly, I'm not a breakout type trader. I don't like the nature of breakouts. I don't like how they can and typically do go against you initially, so it's just not my flavor. But let's step out to a daily chart, and we can actually take a look at an Elliott wave count we've been looking at. This isn't exactly the count anymore. Let me pull that count up. Give me just one moment. All right. Here we go. Here we go. So in terms of longer time frame and longer term structure in the dollar yen, and we've looked at this a couple times today, I am watching what we call an extension long holding. It's off one of our wave 1 highs to our highs here, traded at the 94 level, and that's why we have a 108 upside target. So if this is in fact a bullish triangle, which today's thrust is starting to confirm, we still are inside of yesterday's range, so anything can happen. But above a 99.40 to me begins to actually confirm the breakout for this bullish triangle. And it's an interesting count because it's actually a triangle, wave 4 triangle, but it has a B wave triangle inside of it. And triangles actually typically have other triangles inside of them. They're really hard to discern before the triangle is complete. And until about right now, it's really hard to tell if the triangle is in fact a triangle because it's got a triangle inside of it. Just so many triangles that it kind of blows your mind. So with that being said, the structure here is clearly corrective sideways and remains bullish while above support. And yesterday that line in the sand came in at the 97.60s. Today's move off of that support level confirms it, that below 97.60 we could open the door to a retest of 94s at the very minimum, and ultimately could pull back all the way into, on a daily time frame, we'd be considering a pullback almost all the way to a 90 excuse me, into the 90 level. And that's a very important thing to note. Anyway, let's move down to a 4-hour chart, and we'll get a closer look at the technicals and how technical this market has been, and why we still see the cause and the justification for the push towards a 95. Yesterday we were talking about the 97.60 level line in the sand, and actually, before we get into that, let's take a look at where the 100% extension of the triangle would be, because what a lot of people don't know is that triangles have a tendency to move their 100% out of their largest leg. So the A leg, which is typically your largest in a triangle. Which way do I need to do this? Nope. So I need to do it like this. There we go. So the 100% extension of the A leg off of our E puts us right in at 107.50. So that's good to see that the triangle's potential target aligns with our extension targets at 108.30. So anywhere between, we're looking for the triangle top somewhere right in that 108 region, let's say give or take 50 pips. It's such a massive level. Now let's look at timing and what we've done for timing, knowing that our targets are valid. Let's go back out to our daily. Look at this 20 years daily chart. Going to remove that larger fib pullback because we're not really concerned with it. But what I'm looking at now is, okay, so wave 4, how do we know it's done? We know that obviously price is compressed down to inside of a 200 pip range. And certainly we've gotten a lot of volatility over the last few days, and the market is definitely looking like it needs to move. It's built stops above, the 99.40 area all the way to 104, and it's built stops below the 97.60 area all the way down to 94s. And so we have this kind of compression and gunpowder sitting on either side. It's not much different than like the way an engine works. The air or the gas in the engine is compressed and then it ignites and explodes, right, causing the piston to go flying. Well, that's the exact same thing that happens in a market. We've compressed this market, and it's like a volcano ready to pop. And the volatility of the last 24 hours to me was the signal that it's like that last tremor before a volcano erupts. There's typically earthquakes and tremors that occur within the last 24 hours before a volcano erupts, and that's to me what has happened here in the dollar yen. This market's been compressed. There's so much built up in it. In other words, all the positions that have built up over the last 6 months and the stops that exist above and below the market, everything's just ready to move, and it's either going up or down from here. And right now, based on our analysis, we're still looking higher. We're still maintaining the bullish bias on the dollar yen, but there are the cases that it can blow to the downside too, and this all be a trap. And right now, to me, those levels are above 99.40. We're looking for the move to 108. Above 97.60, we're looking for the move down to at least 94, and somewhere between 94 and 92, or all the way down to that 89, 90 to 90 area. Nevertheless, interesting note here is that the length of this second wave pullback here, the time at which it took to do that pullback, let's bring up a Fibonacci time extension, and it started on it looks like 315, and it continued all the way through September 13th. So perfectly, almost 1, 2, 3, 4, 5, 6, 6 months long, a perfect 6 months. And now taking a look at when our triangle began on 5/22, you can see that we are basically right up running into that 6-month time frame. So it's just shy of 6 months now. This triangle has been intact, and we are pretty much right at the boiling point, right? If from an Elliott wave standpoint, time-wise, this pullback, this correction is almost the same distance and same length that our original pullback, or the first for the same degree pullback in trend, that first second degree, or that first second wave, or the wave 2, has officially, we're running into the same time frame and the same time it took that correction to resolve itself as our triangle. So outside the fact that price has clearly been compressing, it's like like a bomb ready to go off. We have, from a time frame standpoint, almost the exact same amount of time that our excuse me, this first wave took, this fourth wave is taking it as well. So these things don't happen by chance. They happen for a reason. And I'm really on the boat that we're within, I think over this weekend we're going to see a major, and into next week we're going to see the major move in the dollar yen and that resolution we've been looking for over the last couple weeks. Triangles are tricky, but learning to read them and learning to read a market on when things are ready to go and ready to move is, I think, imperative and incredibly important into being a trader. And to me, right now, this market looks ready to pop, and hopefully it does. I've been a long and pretty much bought almost every dip in a long position. I'm free. My stops are on everything are below a 97.60. So going into the shorter time frame look into the dollar yen, we can move down to our 15-minute chart here and take a look at the pullback from yesterday and why we were looking at the 97.60 area as a huge potential support. Maybe 4 hours is necessary here. There's alternate counts that have us already heading out of the triangle. Regardless, let me delete some of these drawings. Let's get rid of all of our trend lines. Let's get rid of all of our text notes. Perfect. Okay, so I'm going to remove some of the what we've been looking at here. All right, so our last major swing was off of, and I've noted here each one of the highs that we've compressed in between, and we can now put in the 97.60s as one of those highs. And so we have a range here that the market needs to break. So we had a 98.60, excuse me, 98.60 to 98.40 high now, or 99.40, and the 61.8 line, the 97.60 area. That's why this was the line in the sand for us. Coupled with it being a 61.8 line, we had a 3-wave correction, perfect equal legs here, down and into that area, and it was those equal legs coupled with the fact that this was a 61.8 line that told us, all right, hold on to your horses. This could be this could be it. And sure enough, it's looking that way. And what I want to do now is I just did a video on this, but I want to show you why we see the swing off this low completed and why the swing reversed before the news this morning and why we knew that. So the swing down off of the 99.40 high, going down to a 5-minute chart so we can see the price action a little clearer. To me, markets occur in a pattern of trades. And here we had two longs, a traditional followed by another traditional, and then a breakdown in an extension. So we went low to low, extension short, traded, held, went to and through targets. The market then began new extensions. You can see the extension trading once here from the drawn from this 98.35 anchor to low. went to target. Now same anchor, new low. This is where things get important. Is that once we broke above the 98.10s, the swing from this high to low was over. The only thing this market could do would be to pull into full short off that high, or pull into a long, which after the swing broke, you keep drawing up that long. It eventually traded right here just before the news. It was a 97.95 long. It was front run by 2 to 3 pips, depending on your broker spread and everything. It traded. It went to and not only through targets this long, but it also broke the full short. So that trade is gone. No more on the chart. Once it went to and through targets, and this is, I'm going to move down to a 1 minute chart so you can see the price action a little clearer after it. When it went to and through targets here, the market began extensions. Those were drawn from the highs to new highs. And zooming in a little bit, you can see the very sharp pullback here, held the 61.8 line, and went up and into target here at the 98.90s. Extensions, you simply pull up the anchor to the new high, same anchor, new high. 98.60s traded, and we've hit upside targets. Our next in the series of extensions, same anchor, new high, that would continue this swing higher, comes in at the 98.75s. Interesting, though, is that there is a traditional after the long that is holding, and we're flagging highs in, that could potentially take this market up and retest of yesterday's high without trading the new extension, which means we need to mark this prior high because it could be a high that we use for a new extension pull and breakout of this market, if in fact that happens. So we'll see what happens into the afternoon. Again, we have Bernanke and Obama speaking. If the dollar yen closes, I think, at or above 99.40, we're going to be looking for, stepping back out to a 30-minute chart, maybe an hourly chart, yeah. We're going to be looking, if we close at 99.40s or higher, I am honestly looking for a gap up to the 110 level, 100 to 110 level next week. That's if we close at or above this high. It's not a perfect rule of thumb. We could gap up from here if the market wanted to, but what we look for is for the market to gap to levels where limit orders reside. And those gaps would be likely where either longs are, limit orders, entry orders. In that case, it'd be, if we closed right here, I would say we're either going to gap up to the 99.40s or gap down to the 98.75s and 98.40s. Either one of those gap downs could be bought against their respective 61.8 line. And of course, gap ups would, we'd simply look for the next in the series long that would very likely fill the gap, and then markets can continue to trend from there. So that is pretty much what I'm looking for in the dollar yen. Above a 99.40, I'm looking for this thing to go much higher. Below 97.60, I'm looking for it to go much lower. So I am a long. I've got my stops trailed. I'm holding my long as is, and hoping for the best. I will be I've got a very large position on. I'll be breaking it down in thirds. A push up into 100 to 150, I'll be taking a third off. Then a push up into 102 to 103, I'll be taking a third off, and I'll be letting the last third run to 108, 107 to 108 target. Anything above 106, I'd be happy with. So that's pretty much all I have on the dollar yen. I mean, it's the snapback reversal of yesterday's candle. Just look at the daily here. That's a nasty. You can probably barely see it because I've got other fibs up here. I can always put those back. Just an absolutely nasty reversal. We're above the prior week on the prior highs on the week, not including yesterday's snap candle. So just a incredible market that is ready to move, and holding above 99 here is definitely, in my opinion, a short-term tell for this market. And I think we could be going much higher here, maybe even today. So I know there's only 4 hours left, but whenever Bernanke opens his mouth, but until we're above 99.40s, bears still have potential to break this market down. So the breakdown for bears will occur as each one of these highs gets broken. And right now it's a 99.40, then a 160, then a 101.50. Those highs start to go. Kiss the shorts goodbye, because this thing is, like I said, bursting out of a triangle, and it's tough to pick a top after when a triangle actually does burst, typically because they are so fast and furious. The all-time lows in the dollar yen were found with a triangle burst lower. So, all right, let's move on. Let's take a look at the. Let's actually take a look at the Aussie yen, because we just we sold this 93.90 area, and we're looking for a continuation of our trend lower, just down to 93.35s today. Excuse me. It's a light position. I took 2 contracts on this one. I only took 1 contract on our euro dollar position this morning. I had less conviction on that trade than I do on this one. But I took 2 contracts. I'll be looking to take one off on any push down towards 93.70. Even though these are the orders I'm working, I'm going to manually take that trade, just pump it off. So stick with us the rest of the day if you want to see how we trade into the close. I will leave the charts up the rest of the day because I do believe we're going to get some movement into the end of the day with Bernanke and Obama talking. So the extension shorts we sold are all in the direction of our larger trend here. We broke down. Let's take some of this stuff off the charts, and we can take a look at what we're actually watching here in the Aussie. We had an extension short in the Aussie. Oh, that's not the right pole. Here it is. We had a low-to-low extension short in the Aussie. It traded at the 95.20 figure. It did not hit downside targets on its first push down. We created a larger flat correction, held 61.8 lines at the 95.40s, and then eventually collapsed down and have now gone to and through targets. So we're actually watching an extension short here drawn, and this is why our stops are where they are. The extension short is basically right here. It's basically 94 with downside targets at the 93.30s, and excuse me. But there's also an extension short from today's daily or today's what have you, that would be valid as long as we remain basically below 94s. We're looking for continued downside towards the 93.30s, and I am short. I'll be taking some off to get free. Probably at plus 20, right around 97 or 93.70, 93.60, somewhere right in that area. If we get a push down, I would definitely be looking to take some off. So it pretty much sums up the Aussie US dollar in the near term. We are coming off of halfway back short for the year, and ultimately I'm looking for, I want to see what happens between 93 and 92. Equal legs down for the dollar yen at this point would be down to the 92 figure. So I'm definitely thinking of building into Aussie US dollar longs down between 93 and 92. But nothing yet. I'm still a net seller, obviously, and looking for the continuation of our trend down and into 93 to 92, anywhere between the halfway back and the 61.8 line of our Aussie. Guys, I'll get to questions when we're done. Euro US dollar. Again, today, after breaking longs, there was a micro short traded to target. The next, the series short is still holding here. This could also be considered the Globex short trading. Ultimately, true resistance on the euro is at the 133.85 at this moment. I don't have us coming off of a great short, other than one of the members in the room pointed out a 35.50 anchor to lows. The last high to lows, kind of like a Globex short. Prior day's high to today's low, or prior day's low, defended a 61.8 line. Definitely agree with that. My only concern with being short the euro, and I do not recommend a short euro position, is the fact that we've actually traded the full halfway back long of our swing at the 133 figure. I'm not denying the fact that we couldn't dip in and head down to 132 and this thing still being a valid long. That can happen, and very likely might. I mean, the euro has a tendency to do that. But to me, and what we're watching for is, what's going to take us to 141 and the next larger swing, and that's going to take some time to play out. So shorts are definitely, at least on the smaller time frame, still working. We tried for a long this morning and took a 30 pip stop and a half position, so down 15 pips on that net trade. and it ended up obviously not working out. If you want to flip short, that's definitely the trade from this area. But I see better opportunity to be a seller of the Aussie yen, and basically that is because I see the Euro Aussie getting a bid and holding long. So that's the biggest reason today why I've been looking to be a net seller in the Aussie US dollar and was trying to get long the Euro US dollar is because of what the Aussie yen is doing, or Euro Aussie is doing, and definitely still flagging highs, showing some strength here. So we'll see what happens with the Euro Aussie. It's still coming off of the 141. This is a huge support level, and from here we could go to 154. Another reason that I'm a little hesitant to say that the Euro US dollar is heading much lower, because mainly it's already traded. We'll go back and look at the Euro US dollar, going out to the 4-hour chart here. It has traded the 133 level, and the 133 level has gotten its reaction into its first target here at the 142.20. So technically speaking, the algos are free off of 133 against a 131.60 stop. They've got their 120 pip first target hit. So they would certainly let the market fall and go against them. But again, I'm looking from a longer term perspective, I'm starting to look for swings in the euro towards 141. I'm just not ready to throw a full size position on for a swing trade just yet, because we are seeing shorts still holding and controlling this market on the smaller time frames. Any break of these little shorts, I say, hey, go for it. There's the potential for longs to pick up the market from any break in a short. So, but we have to wait and be patient for that to actually occur, and wait for the market to confirm. Just like the dollar yen, you could have been a buyer here at the 98 or the 98.60 area, or you could have waited for the extensions to break and then gotten into a reversal long. That's kind of the setup I'm looking for. I'm looking for the equivalent of reversal long in the dollar that we saw like in the dollar yen, but that same equivalent in the euro dollar before we actually get into a position. Okay. Pound US dollar holding micro shorts today, 160.40 resistance, and again, it's kind of stuck between much larger 159.20 support and 160.08 resistance. So the pound is not something I'm trading right now because I see it in larger time frame kind of wedging pattern. It's certainly not. I'm seeing this as potential for a large triangle forming, so I don't see any reason to be trading the range in the pound yet. I'd rather sit back and wait for it to confirm itself, or get towards the end before it does some kind of burst and capitalize on that type of move. That's how I prefer to trade triangles, ranges, whatever you want to call them. All right, I do want to look at the 10-year. This is another important market in my repertoire, and I'll edit this comparison and I'll make it a little less apparent here for the time being while we're talking through the dollar yen. There, it's kind of hidden now, so you guys can not see it as clearly, so it's not jumping out in your face. But very important here for the 10-year is the 10-year has actually traded and now held a full halfway back short for 2013. And this is a major level that we're coming off of right here at the 128 handle. As the 10-year goes down, this is the correlation I have up. This is the 6J, and the 6J is the yen futures. The difference between the yen and the yen futures is the yen futures are very simply an upside down dollar yen. Okay, and they have the dollar yen and the ZN have an inverted correlation. Therefore, the 6J and the ZN have a positive correlation. So you can see how early on the dollar yen started pricing in this move in rates far before the 10-year actually did. Then the 10-year did a full pullback, while the dollar yen continued to show and lead the 10-year to the downside. This is what's important about correlations, and particularly correlations when you look at an analog of a correlation or a direct overlay. You have to understand what is leading what. The dollar yen has been leading the 10-year, okay? And confirmation of a move happens when the uncorrelated or the slower one actually starts to move. So what we're seeing here now is the dollar yen has the ability to potentially take us lower to its targets before the 10-year gets there, but the 10-year has already rolled over and started its reactionary move. So it's a very, very important to note that we have, and at least over the last, today, over the last 24 hours, we've been closely tracking this correlation, because all the way down to the 5-minute here during this news event, the two have been almost in lockstep. You can see here the 10-year is down 0.8% on the day, while the dollar yen is up, is actually now up right around 1%, but I mean a couple pips lower, and it would be right in step with the 10-year. In other words, they've moved completely in lockstep all day to day, and you can see that. But it's important to note that the 10-year, just gives you a little bit more confidence in the dollar yen long, is that the 10-year has gotten a huge move off of its major resistance level at the 128 figure, and now it's a matter of where is support, and that support lies down. If there is any, we would see support at the very least at the 125 handle. So we still have further to go, and ultimately, downside targets on the dollar yen are all the way down here at 119, which, just looking at the correlated analog, would easily put the 10 or the dollar yen. Would very easily put. Let's try to get the correlations the same so they're on the chart. There we go. Would easily put the dollar yen. It's trading a 10 spot 100 level, right? It would put the dollar yen at basically 8 spot 8, which is effectively, so that's 100. That's another 200. So that's 100. Then this is 3, 5, 7, 9. Put it at least 1,000 pips lower. Well, guess what? The targets on the dollar yen, they're about 1,000 pips higher. So point being is that the correlation between the 10-year and the dollar yen are confirming that a move in the 10-year to its target would equate to about 1,000 pip move in the dollar yen higher. So important to know. We've been tracking this. I track this correlation all day, or not just all day. I track this correlation every day. I have been for the last 10 years. But it's an important piece of the puzzle to what's driving this market right now. And I hope you guys see that all of this yen move, it's about bonds. It's bonds, 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 bonds. It's the equity curve. People can say what they want about Forex and whatever they want about trading, but when it comes down to it, it's all about bonds right now. And that chart is the proof of it right there. You can look at the 30-year the same way. But the 10-year happens to be where the direct correlation lies. So, all right. That's I think about everything I've got for you guys today. Very short. I have Euro Yen coming up off of a major support level 2 down here at 31.60, and Aussie Yen basically heading lower, just like the Aussie US dollar. It needs a 91.80 to 91, which is about the same distance that we're looking lower on the Aussie US dollar. So those two will probably head lower together, while the rest, other yen crosses may start to rally. But definitely a major bottom for the or major top for yen strength is occurring here. And in my opinion, we're about to see a major reversal and some serious yen weakness enter this market. More so than dollar strength. I believe it's going to come back in yen as a move in the yen more so than the dollar, based on what we're seeing in the 10-year, which means our other FX crosses are kind of free to do what they want. So with that being said, everybody, have a great weekend. I'll be here all day answering whatever questions you may have. That pretty much wraps up our London session recap for today. So like I said, if price action warrants it, I'll put out a nicey session recap. Today might be a day we do it, and that will, if nothing's changed by then, I'll just post this recap as our end of week recap as well. But as we get closer to the close, we'll go over in today's room. We'll go over some what are they called? Potential gap scenarios, and I'll show everybody how I analyze for gaps, at the market close, before the market even opens, and show you how to, with a high probability, not necessarily trade them, but particularly if you're in a position, it's nice to know where the highest probability for gaps to move to is. So with that being said, Have a great weekend, everybody, and we'll be back with you as price action develops.